So let's continue our last class on the companies. We did talk a bit about public limited liability company and we did talk about private limited company. So we're still continuing down the line of the legal procedures or the documents that these companies must submit. So we're continuing now on the statements authorized, registered, or nominal capital. And this is the amount stated in the MOA, which is the maximum output which a company is authorized to raise. This is the amount of money that they could actually have at hand. So let's look at prospects now. So what exactly are prospects? So this is an invitation. So prospect is an invitation to the public to buy shares in a public company. It contains detailed information to enable investors to estimate its prospect. It is important that the public should not be misled. So the information in the prospect should be as accurate as possible. So let's look at the statutory declaration. The statutory declaration are commonly used to allow a person to declare something to be true for the purpose of satisfying one legal requirement or regulation, meaning that um, the, statu- the statutory declaration is the rights of an individual in a form so that they could actually have legal tenders in that business. Let's look at now the certification of incorporation. This is a legal document relating to the formation of a company or corporation. It is a license to form a corporation issued by state government. Its precise meaning depends upon the legal system which is to be used. And then we have one of the most important document is a certificate of trading. You can't really do business without this document. So out of every document, this is the most essential, I would like to say. So it is a certificate issued by the registrar of companies to the public limited company to grant permission to commence its business. Without this document, you cannot commence businesses. You cannot commence your business. So the private limited company may begin trading after receiving a certificate of incorporation, but the public limited liability must issue a prospectus inviting the public to subscribe for shares before a certificate of trading is issued. And that data within the prospect also must be accurate. So let's look at some of the advantages of private limited companies. So, a larger capital based on a sole trader or partnership, the company has continuity and thus can obtain loans easily. The company has a separate legal identity from ownership. Shareholders have limited liability. Let's look at some of the major disadvantages now. So, first of all, you generally have more capital as in comparison to the sole trader or partnership generally. The company has a legal separate identity from ownership, so the owner or the individual that made the business does not take any significant losses. The business exists as a separate entity on its own rights. So let's look at some of the disadvantages. Capital is limited since the membership is limited to 50%, so that is limited. Must file reports with the registrar of companies. Selling of share is restricted to the private grouping. This could be inclusive of family, friends, and what's not. People close to you. It is not inclusive of the public. So let's look at the advantages of a public limited company. It is easier to obtain financing. Shareholders have limited liability. Shares can be quoted on the stock exchange and sold to the public. Company able to grow and obtain economies of scale. Economies of scale meaning that you could leverage the price of your goods and services. It has a separate legal existence. Changes in shareholders and directors do not affect the continuity of the company. So let's look at the disadvantage now of the public limited company. The legal requirements may be costly and very time consuming because it takes a lot of time to register all of those documents, such prospects of these things take a lot of time. The accounts have to be made public because of large size. Decision making can take extremely long. Differences in opinion may develop between owners and directors. Loss of control of company if sufficient shares are obtained. You could even lose your business because people bought all the shares and you don't really have a lot of say when all your shares are bought exactly. These companies lack a personal element, so it's not one person. Everyone has a part of it, so you can't really definitively say this is the boss. So yes, we'll close right up to there. Our next video will be on multinational cooperations. So we'll take us up right there. Subscribe, guys. See you on the later video.